Hello everyone, in today's video we're going to take a look at the SPY, the NASDAQ, the IWM, the bonds, what is driving the market, a few interesting news details that I would like to share with you guys, as well as what the next steps are for the market. Clearly see that the SPY is teetering at support, but it failed at resistance. So how much further can it go down? Will it go down? We're going to take a look at all of that stuff in today's video. So without further ado, get started with the video. So I want to start off with this. Walmart aims for 65% of its stores to be automation serviced by 2026. Crazy. So essentially, it was not immediately clear if this move would lead to more layoffs at the country's biggest private employer, with about 1.7 million U.S. workers and another 60,000 abroad. The company said the moves would reduce the need for lower paid roles. About 55% of packages that it processes through its fulfillment centers will be moved through automated facilities by January 2026, improving unit costs averages by about 20%, the company said. So Walmart is trying to make its move to tackle and beat Amazon. So Walmart has the physical locations. Amazon was always lacking in terms of physical locations because it didn't need to. Amazon, there weren't any storefronts for him, but Walmart needs to, like, they have the physical location. They have the fact that people go into the stores and everything like that, more so than Amazon, obviously. But now they need to figure out a way, especially with interest rates rising, with the money that they have not going as far, which is why they're like laying people off, and they're trying to cut back on labor costs using automation. So this is very, very interesting out of Walmart. It's a very interesting article. And they mentioned this days after mentioning that they're going to lay off more than 2,000 people at facilities. So that is bad. We don't know how many more people they could lay off. And this is, I get, like, usually when companies do this, this is a like feeler. They're feeling out what the sentiment is, because they're multi-billion-dollar companies. So they have PR, they have teams of people that are testing the waters. So they don't want to lose grace from people. So they're like dipping their toes in the water, basically. So keep your eyes on that. So this one is pretty fun. Johnson & Johnson to pay $8.9 billion to settle talc cancer lawsuits. So Johnson & Johnson said it would $8.9 billion to resolve all cancer lawsuits tied to its talc-based powders, and will make a fresh attempt to contain the liability within a bankruptcy filing by one of its units. Traces of asbestos. So women and men blame Johnson & Johnson's 129-year-old baby powder for causing ovarian cancer and mesothelioma, a cancer specifically tied to asbestos exposure. Victims allege internal Johnson & Johnson documents dating back to the early 1970s showing workers warning managers about traces of asbestos found in talc bottled for baby powder. So talc is basically a mineral that you get from clay that you could mine out, and they use that in their products. And to go on, the article says this is the largest products liability settlement ever realized after a bankruptcy filing, said Michael Watts, one of the plaintiff lawyers who negotiated the deal with Johnson & Johnson. Our job is to get our clients restitution for their injuries, and the settlement is the culmination of over a decade of fighting for justice. Johnson & Johnson argues the talc cases pose a financial threat to the company. They pose a financial threat to the company despite its more than $478 billion market capitalization. That's because juries could repeatedly hit Johnson & Johnson with multi-billion verdicts that threaten its financial health, its lawyers contend. The company also suffered reputational harm tied to the talc findings. So basically, this is a chart of Johnson & Johnson, and this is a daily chart. So they released the news, and Johnson & Johnson skyrocketed up due to the settlement. So usually when there is settlement news, stocks end up doing really well. So there's that. Next, TD Bank, Toronto Dominion, becomes biggest bank short with $3.7 billion on the line. So here's a chart of the largest short bets in financial stocks globally. TD Bank is number one. And you can see it's more than Bank of America, JP Morgan, Citigroup. TD Bank is basically very, very over-leveraged things that it shouldn't be over-leveraged. And it has a stake in, the housing bubble. So it says some short sellers have also targeted TD because of its roughly 10% stake in Charles Schwab, which recently lost $47 billion in market value as it came under scrutiny over its unrealized bond losses. And as well as TD's position in Canada's housing market, where variable rate mortgages are common and consumer insolvencies are on the rise. So TD Ameritrade is over leveraged on things that they shouldn't be over leveraged. Charles Schwab is trash. It's not doing too well, and obviously, and TD is also involved heavily in Canada's housing market. So not looking good for TD. With that being said, we can take a look at the SPY on a daily chart. So basically, what we're looking at is obviously the SPY had a bit of a failed at resistance, right? 412 did not work. Once you have, and the market currently, it's very trendy. So even intraday, if you look at the market on a 1 minute time frame, if we fall very, very dramatically, the first green candle, you can basically go long with a stop loss below it. This works in different environments. It doesn't work all the time. Obviously, MMs, what they do is they basically change the market dynamic of how price movement responds. And they do this every few weeks. If you notice that they change up the way that the market moves every few weeks, so that once retail can figure out what their pattern is, or once other hedge funds can understand what the patterns are, then it's easier for those hedge funds to make money. So, but MMs don't want retail or other hedge funds to comfortably continue to make a lot of money. They make a lot of money when they chop people out, right? So currently, right, the way that the market is moving right now is very simply, if you have a big rise, right? So this works on the 1 minute chart as well, right? This setup that we're currently seeing has been working perfectly for the past few days on a 1 minute chart as well. When you rise very, very sharply and you hit a level of resistance, if you make a red candle at that level of resistance, it doesn't need to be this big. It could be a red candle, right? If you take a short on the close of that red candle with a stop loss at the top of it, that has been working pretty beautifully. So basically, the things that work out on a smaller time frame also work out on a larger time frame. So currently, that's why, you know, the bearish move and everything like that would have worked out beautifully. And the bearish move yesterday, right, would have worked out beautifully because there was going to be another day of follow through. Even if we ended up getting a bit of a bounce, this would still be a stop loss, and from there it would just be another opportunity to reshort. But we never got that opportunity to reshort intraday in the beginning of the day before we fell. Obviously, we fell to a 406 before we got any sort of substantial bounce back. So yeah, just keep that in mind. So the next thing that I want to talk about is the Fibonacci levels on the SPY. So the SPY is currently, you know, I was saying that 408 was going to be a major level of support, right? We're currently clearly below it, right? But something to take into consideration is, so this is a fib level that I drew from March 24th to April 4th, obviously, right? So disregard the background fib level, just focus on this, the smaller one. So when you make a fib level from the most recent lows to the most recent highs, the 23.6% fib almost always gets retested. Almost always gets retested. Like, if it doesn't retest the 23.6% fib, that's... I would have to like see how many times that's actually happened where it doesn't retest. But It did. So basically, the 23.6% fib, as long as it holds above that level, then we can continue up. And if it bounces and closes tomorrow above 409.50 to 410, once again, I was saying 410.50 would be a comfortable level for us to so today, right, I was saying that we would need to close above 410.50, right? In yesterday's video, I was mentioning that. So now tomorrow, if we can comfortably close above today, which is not that big of a deal, but then we comfortably close above 409.50 after a nice bounce to the 23.6% fib, this would give enough opportunity for people to really see like if they want to be long or short on this market. And if we get a close above that level, obviously it's risky to go long over the weekend, but especially on a long weekend. No pun intended. But essentially we came back, we're testing a major level of support. And from here, we have to just make a decision. So below this, if we break below 405, right? 405 is a major level of support. If we break below 405 on the SPY, then this 38.2% fib is on the table. And by that point, then the upward momentum of this entire move is going to be at question here. But then things can be interesting, because if you want to take the long trade on April and how April is on average 2.3% green for the month, the more red it is, you could buy into May or June calls. And the more red we are for the month, even if, say, for example, we end up getting 0.7%, 0.8% red for the month, if you get into some longer term calls and buy in like the next 2 or 3 weeks, we end up turning 1.5% green or 2% green even. That's pretty easy, like safer. It's safe money. But it all depends on obviously it depends on the candle structure as well. But currently, just we're looking at this right now. 22.6% fib is very important for us to hold. The next levels below that is 405 and then 403.32. To the upside, we need a close tomorrow, in my opinion, above 409.50 to 410. And if we could get that, then things are going to look really good. All right, so this is a chart of the NASDAQ. You can see that we just crossed below on the MACD. This is the MACD line. And once we get one cross below, usually that's a bearish crossover. We should get 1 to 2 days where it's flat or bearish, because we have this momentum to the downside. And the only thing that would cause us to shift the momentum is like a good solid close above 317.65, in my opinion, which is a 22.6% fib. So you could see that the NASDAQ came and retested this 38.2% fib, where the SPY, relative to the SPY was at the 23.6% fib. The NASDAQ bounced, held the 50% fib, and is currently closing above the 38.2% fib. So it's important to take that into consideration. The NASDAQ is performing better than the IWM. Obviously, the IWM is way weaker relative, right? The IWM is holding above the 50% fib, and it's held above the 618. So, all right, so to end off, I want to look at the news, right? So Thursday, tomorrow, obviously, we have unemployment claims coming out tomorrow. Then Friday, the market is closed, right? Next week, we're going to have important CPI data coming out Wednesday, pre-market. Then FOMC minutes again, right? At 2 p.m. Then Thursday, we have even more important news coming out pre-market. And then Friday, some more important news coming out pre-market and throughout the day, right? But then also next week, it's going to be a lot of earnings for banks and for a lot of IWM names, right? So a bunch of different banks, biotechs, things like that are going to have earnings all throughout the week, next week. So economically sensitive stocks. So that you guys also need to take into consideration. Like a large banks are going to have earnings throughout the week, and a lot of these companies, it's going to be really like hard to be long banks given interest rates and everything going up and everything like that. So it's going to be interesting. to be honest. A lot of stuff can happen next week. CPI data coming out, and then FOMC minutes the same day, so it's gonna be pretty fun. So just keep that in mind. What I would like to see overnight, basically what I would like to see into the close on Thursday is some sort of bullish confirmation, because that would make it the easiest to go long into the weekend, because we have a long weekend, but there's no immediate news coming out on Monday morning, so that would detriment an options position. So basically the market is basically doing what it needs to do. It's stagnating a bit at support. It's not completely capitulating. And this is also what I mentioned would most likely end up happening. We need to see some sort of it's not going to be a quick bounce off of everything. It could, but yeah, so basically now we just need to see if this 22.6% fib can hold on the SPY, 38.2 can hold on the NASDAQ. And basically, if we can hold these levels of support, and ideally, if we could break above and close above 409.50, 410 tomorrow, then we can lean long over the weekend. But, aside from that, I mean, it's tough. It's tough to try to do that, especially heading into a long weekend. It's probably just the safest not to hold anything, to be honest. Or if you are going to hold something, you're either going to need to have a lotto position or long term over a month out. So yeah, let's just hope we get a close above 409.50 or 410 to go long. And yeah, things should be fun. So I hope you guys enjoyed today's video. Yeah, make sure to like, comment, subscribe, do all that good stuff. I will see you guys bright and early tomorrow morning to end the week. Thank you.